Hey, recording this video Sunday 15th of December 2013. Hope you're having a good weekend. Well, we're all packed, ready to get on some planes starting on Monday. So going to be out of the picture for a couple of days, but I thought I'd record just a quick video on the global macro charts. Did the Forex charts at the beginning of the week, so I just thought I'd run through the other market charts in this video. And the short summary of what I see going on is I think we're going to get continued weakness in equities this week, but we're going to put in a support, an important support kind of over the next week, week and a half, from which I think we're going to continue to rally on equities and make new highs. And part of the story that supports that is that the bond market is so weak, and so I'll run through my bond market charts and show you what I'm looking at this weekend. So if you do follow what I do in terms of the better indicators, this is the setup that I'm using in these kind of global macro type charts, and it's looking at the daily and the weekly charts with the better sine waves. So just the usual setup. Exactly, there are no settings per se in the better indicators. They're all adaptive. So I use exactly the same indicators on my day trading charts as these long-term charts. Better sine wave, better momentum, pro-am, just side by side. But instead of putting a monthly chart on here, just for ease of recording a video, I just put the daily and the weekly kind of side by side. And then the other thing that I'm finding useful, I kind of, in years gone by, commitment of traders was incredibly important. Then I kind of fell out of love with commitment of traders for a while. But I do look at them these days because I think the most important thing is just to see what the overall positioning of the professionals is, and whether the professionals are actually supporting bull markets or bear markets in these kind of major markets. And on those charts, the commitment of traders charts, what I do is I have a weekly and a monthly chart, because the data only comes out weekly, and then I've got the data for the professionals kind of flipped upside down, and then I just use a divergence indicator on top of these to show kind of places where the divergence is happening between price and commitment of traders. So that's the setup that I'm using on these global macro charts. So let me just roll through the gold, silver charts, etc. First of all, this weekend, pullback to end of trends gone off on the weekly chart here. So this is pretty important down here. And we have busted through the support level on the daily chart here, falling through the ice here. No kind of big sell-off. I've been talking about this. The last big kind of sell-off that we had was into this flush pattern. We've not had a big sell-off here, and this is critical support. Now, question is, are we going to just mess around here? We could have just overshot on the daily chart and just be caught by this support on the next time frame up, in which case we've still got to get out some cyclical energy. So since we've overshot here, we've got to go and make resistance and support, and it's at that point that this will be kind of critical going forward. Whether we'll be able to hold this $1,200 price is the key thing. If we drop through there, that'll bring in quite a lot of volume, and then we'll make a pullback to end of trend kind of sequence kind of further down. But we could be just temporarily holding here and making resistance to support on the daily chart before this whole thing has got out, exhausted all of that kind of cyclical energy. So there's still weeks to wait, several weeks to wait to see how that plays out. It is at 1200, which is important, but on the commitment of traders, a little bit of good news kind of this week. We ticked up a little bit here, and remember, on gold charts it is kind of above the zero line here, so there's kind of overall support for some strength in the gold market. But the sell-off was well signaled by what the professionals were doing. They were supporting this kind of sell-off over the last year and a half. But a little bit of good news in terms of what the professionals have been doing this last week. Silver's got a similar kind of position. The pullback to end of trend's kind of gone off this week. That maybe is a flush pattern kind of waiting to go off here. Again, 19 critical level support down here. This one, you can see the same thing. We've overshot support here. We've still got to make a resistance to support on the daily chart. So we've still got to go back and probably make a pullback to end of trend. So there's time to run in terms of these charts, and whether we drop through 19 and all the volume kind of comes in as people just kind of give up, capitulate on this, is the question, or whether we just kind of run out of steam, and at 19 it'll start to hold here, but it'll be just basing for a fair few weeks before this thing's kind of convinced it's made a bottom from which we can rally. So there's time to run, and it's just a question of whether we're just going to hold at these levels or just kind of bat around kind of previous support. Commitment of traders on silver again popped up this week, so again it's kind of above the zero lines, that kind of bullish. We have seen these divergence patterns kind of show us weakness in the way the market's going, but that was a little bit of strength this week. If we were starting to go through the zero line, that would mean it convinced me that we were just heading through 19 or 1200 on the gold charts, and we were going to see a massive kind of sell-off, but we had a little bit of strength from the professionals this week. Crude, so crude did weaken over the last 2 or 3 days, so I'm glad to be out of this trade, and this is making pullback to end of trend here. I know we've made a cyclical support on the weekly chart here, but it's no blue professional bars kind of really coming at the lows, just bouncing off a rainbow pattern. So we've got to play this thing out, pull back to end of trend, so still in the downtrend on this daily chart on crude. But if you look at the commitment of traders, it's been positive for 3 or 4 years, and this is why I've got just this overall kind of bullish bias on crude. And so at some point there'll be a good setup to jump on board again on crude, but it's not yet. Copper. Now, interesting, copper kind of a couple of months ago I was thinking copper was going to break through 333. That was kind of the key number up here, and kind of break into an uptrend, and we didn't. We had blue professional bars and we kind of fell off from there. But we've been caught in this channel. We found support here after bullish divergence kind of comes in. We've got cyclical resistance on the daily chart. I don't know. We've got to do a little bit more kind of testing on the downside here on copper. So we've got some weakness to come in after that cyclical resistance on the daily chart kind of comes in. But for me, the thing that's stopping this thing going is commitment of traders just not positioned correctly for a rally in copper. So we're doing some of the right things here in terms of pullback to dirty end of trend. Blue professional bars coming in at the lows. We've got to push down, test down with resistance kind of coming in here, see what happens at the support level again. But the commitment of traders is just not supporting a rally on that, so I'm not all that keen on copper for that breakout trade again. Now bonds. Okay, this is the important thing. So because if we're really going to see a top in equities, the bond market will start to strengthen kind of before that happens, but it is just not happening. It's not happening in the government bonds, and it's not happening in the other kind of corporate bonds, and I'll show you those charts. So here's the 30-year chart. We're playing around with the support here. We've got cyclical resistance coming in on the weekly chart here. Nothing the lows here in terms of blue professional bars kind of stepping in. We just bounced off some Rambo patterns. It's not very convincing in terms of marking a bottom with a exhaustion on the left shoulder, blue professional down bars or anything like that. So critical support. We've spent a lot of time messing around this kind of support level, 6 months or so, and we've got this cyclical energy is now kind of going to be moving to the downside. We've still got some weakness in equities to go over the next week or so. So I don't think there'll be some strength because of that. If we continue to see weakness in equities, some money will flow into bonds. So there could be some short-term kind of strength in bonds. But I think it's starting to kind of wrap around, and we will be breaking through this support level, at some point in the next couple of weeks. And when you look at the commitment of traders on bonds, you can see here this was this week's reading. So the professionals kind of giving up on bonds. There's nothing supporting a rally in bonds at this point. And then so that's the 30-year, which is kind of the most important one. Some people argue the 10-year is more important, but I go down looking at the 30, the 10, and the 5 because people have different preferences in terms of the risk that they're willing to take, and a lot more money kind of moving into the short-term stuff than the long-term stuff. But here's the 10-year chart. Again, pretty weak. We've got resistance in here. This has got to play out, resistance to support. We've had exhaustion, bearish divergence, flush up here. We're sitting on a support level at this point here, ready to break. And then look at the commitment of traders numbers. Nothing holding this thing back. They're expecting this thing to kind of break as well. And then here's the 5-year. So we've already broken through, having had the little strength that we had was a pullback to end of trend. We've broken through support here on the daily chart. We're running down resistance to support on the weekly chart here, and then commitment of traders again weak. The shorter term, shorter dated maturity kind of bonds have been stronger in terms of what the professionals have been doing, but that's kind of showing some weakness as well. So. And the bounce back in the 5-year was kind of stronger than 30 and the 10. And then I was just also saying, so a lot of things I'm really just saying that money's moving from the government sector to the private sector because people are wary of holding government bonds, and so moving money into corporate bonds instead. So I was just looking at what was going on in the ETFs that cover those. So the TLT is the ETF that covers the government bonds. LQD is the ETF that is most representative of liquid corporate bonds. So this is kind of quality corporate bonds, investable corporate bonds, and then HYG is the high yielding kind of, they call it junk, but it's kind of, lower quality corporate bonds, high yielding bonds. And you can see here just over the last 5 or 6 years, the top in the market in the government bonds happened in mid-2012 up here, and we've been a strong downtrend ever since. The high quality corporate bonds, the rally continued for an extra year after that, but then in the last 6 months we've had weakness in that, and you can see, whereas this one was making lower highs, we were just making kind of a double top here. And then the strongest of the lot has actually been the junk bond market. So here you can see prices have just remained, this is a percentage change chart, but in terms of prices they've kind of remained fairly stable over the last 18 months or so. So the question is, if the money's flowing out of government bonds, is it flowing into the corporate side? And last year, yes, that was the case. These were kind of holding up quite nicely, but they've started to weaken in the last 6 months, certainly on the high grade stuff. And junk has been kind of fairly good in terms of yields, but these could be starting to follow the government bonds down. And again, I'm looking at these charts and saying, look, we're rolling over. We've not seen blue professional bars at lows. We've not seen the last blue professional bars we've seen have been at the highs here. That's why we're kind of rolling over and kind of getting going. So we could have some strength in bonds for a week and a half while the equities market is finding a support level, but then I think these things will start to roll over. And then this is valuation of, you can check these indicators. This is the SPY versus the TLT, so this is equities versus bonds, and the relative under and over valuation momentum indicator here that you can download from the site. And this shows you that in the last couple of weeks we've been relatively overvalued in terms of equities compared to bonds, and so we could roll down to an oversold kind of level on equities, and bonds have a little bit of a rally, and at that point then that'll put in our support for equities, from which we can rally and put in a point like this or like this kind of coming in where we kind of support the equities market. So but at some point we've got this thing kind of wrapping over, and that'll come down, whether it comes into a spike like this or takes, actually this little retrace didn't take long to form, and that's what I'm expecting, a fairly sharp sell-off from which we kind of bounce. And this is why the equities market's been fairly weak over the last few days. We had a double top be made. You can see here this whole cluster up here of no demand and Rambo patterns, and then we came back to test double top here with no demand. Sort of saying in one of the videos, tops are not necessarily made in the equities market with I think long-term tops are made, but short-term tops can be made just with no demand. Long-term tops, you need to see exhaustion volume and so on. We've not really seen that on the upside. All we've seen is just a lack of demand at those highs, from which we've kind of rolled over. So you can see these previous highs, no demand Rambo patterns, very similar to what we've seen here. And just think we're going to get a continuation of the weakness that we had over the last couple of days, because we're not all done on the downside. Just as a trailing stop, so this is better X trend, kind of trailing the stop all the way up. I think this is representative of what's going to go on. So we've got some weakness happened here, but what I'm looking for is in the next week or so to find that support in that kind of previous support area, from which we can kind of rally back to new highs, I think. And again, commitment of traders on the equities side is really supportive of a continuation of the rally. I know we had these beautiful little crash warning, stock market crash warning indicator signals, over the last 6 or 9 months or so, but they've just not worked out. For those to kind of work out, the commitment of traders needs to really weaken and kind of head below the zero line here, but they didn't. They kept on strengthening here well above the zero line. So this is why the professionals think the market's going to continue to rally into probably next year. God. Anyway, so where on the downside are we going to catch this support area? And so again, looking at the daily and the weekly charts here, we're coming down, having made these kind of blow-off moves. Similar patterns on both the daily and the weekly chart here. You can see a blow-off move, bearish divergence, flush, finally with a Rambo pattern at the highs. Very similar on here on the daily chart. Blow-off, bearish divergence flush Rambo pattern at the highs here, and we've fallen off here. Ignore that Rambo pattern there because that was rollover data, so it's a little bit spurious there, just because the volume wasn't rolling through this particular kind of contract. But we're coming down to support on the daily chart. At some point we'll put that in. Previous resistance could potentially become support, so around this area, 1740-ish kind of area is an area of support. If we run past that on the daily chart, so it comes in but it doesn't hold, we'll come back and find a support on the weekly chart here, because we're doing the same thing, kind of running down on a weekly chart to find that support. So I think it's going to be weak for a few days, maybe a week or so, and then we'll find that support area. And what I'm looking for on the downside is some kind of exhaustion selling volume. So back it down from a daily chart. If we're trying to find support here using beta sine wave, where these kind of cross and we find a support level on the daily chart, that syncs up with a trend move on the lower time frame. So daily time frame, the lowest time frame compared to that, just go down 2 time frames to the 45-minute chart here, and we've had a nice little sell-off. We're below the support level here. This has got to wrap around, make pullback to end of trend. This exhaustion selling signal was just getting the move going. It wasn't ending this, it wasn't on a left shoulder. So as we've got this still to play out, pullback to end of trend, I think we're going to get an exhaustion selling signal on a left shoulder that will be that area where we can find support. But although the last couple of days seemingly we've held for the time being, we've got to make that's got to wrap around and form a complete move to pull back to end of trend. So looking for some kind of more exhaustion selling on the downside, and it's probably going to happen while I'm on a plane, so that's kind of unfortunate. Love those sell-off days. 45-minute chart, I always say if you want to back it down to a tick frame chart, the 40,500 tip bar chart is very similar to the 45-minute chart, and you can see almost the same kind of pattern. We've broken through support here. We've got to make pullback to end of trend on this chart, put in a nice exhaustion pattern either on the 40,000 or the 13,500 tip bar chart to end this thing. So that is what I'll be looking for in the next week or so, that kind of sell-off where the volume kind of comes back in. We lurch down to another level, find that support that kind of comes in on the daily chart, and have a rally from then. In the meantime, the bonds might be a little bit stronger because a little bit scared out of the equities market, so bonds might strengthen. But in the intermediate time frame, I just don't see the bond market holding at this point. We've got all those kind of bad news type things kind of showing up in the charts where we're going to continue down on bonds, which means that the rally in equities will just continue to play out, I think, over the next several months or whatever. Anyway, so there we go. Probably a long video, apologies for that, but I do get good feedback from these multi-market ones. People kind of like to see what I'm thinking in terms of the bigger picture. So if you find that helpful, let me know. Good luck with your trading next week.